So Nvidia just reported earnings, and in the past few weeks, we've also had numerous big tech companies report their earnings and kind of tell us where they're going to be spending their money. The three things that I want to say we can say for the fact is: one, AI infrastructure still continues to be built out. Two, AI infrastructure is supply constrained thanks to AI chips. And three, big tech is spending a lot of money on both developing their own chips and purchasing chips from companies like Nvidia. So on today's episode, what I want to do is take a closer look at what I believe are three companies that can benefit due to this whole AI craze. Just going to give some information about them and share my overall thoughts of which ones I am bullish or bearish on right now. So let's take a closer look in today's episode. Before we go any further, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for 50% off my Q3 earnings ebook. I'm giving this special right now as it is earnings week for Nvidia, and it's a big week for me. So I hope you guys do enjoy the Q3 earnings ebook. You also get Q2 for free.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so you guys know Nvidia is my biggest position. And right now, the AI market is in such a weird state. And the biggest reason I say it's in a weird state is because this is a market that is supply constrained. If this market wasn't really supply constrained, I would personally have said that this is pretty much a one market, a one winner kind of take all, right? If you have the best chip and you can provide as many supply or as much chips as you possibly can due to demand, then it's going to be a number one take all. But because this is a supply constraint market, I do believe it allows opportunity and has created kind of this handicap for every other chip maker out there to get some piece of the pie. Obviously, Nvidia is going to be the big winner, and I'm not saying any of these are going to overthrow Nvidia, but because of the current market conditions of the supply constraint, the current market condition gives the opportunity for these other players to win. And we've heard from TSMC before that the overall supply constraint in AI chips is going to continue at least for 2025 and even possibly for some time in 2026. So the first company that I'm going to have to say is going to be AMD. So AMD is, I think, overhated too much. I believe where Nvidia, one of the sucky things about Nvidia is it does so well, right? Nvidia is that number one child, and because it is that number one child, everybody is expecting so much from that company. And we kind of saw it from Nvidia yesterday, where earnings were great. I thought earnings were amazing, but because we were expecting so much from our number one child, even if they come back with an A+ or 100%, we're like, okay, congratulations. That's what we expected from you. Now, AMD, in my opinion, is the complete opposite. This is the child that we don't expect much from. And I think that is one of AMD's secret weapon. The reason is because if we don't expect much from AMD, the quarters it comes back with a B+, or even an A+, we're gonna be super excited. We're gonna be like, whoa, we were expecting a C from you, a C-, but you're giving us better results than expected, and that is why we're gonna give you a better valuation. I mean, if we take a closer look at forward PE ratios, and I'm just going to look at Nvidia and AMD right now. Nvidia's forward 1 year PE ratio, which is the end of next fiscal year, so it's about a little bit over 12 months from now. Nvidia is sitting at 34. AMD at that same kind of time frame is sitting at around 26. So we can see AMD is trading at a cheaper valuation. But again, the reason being is we're not expecting too much from it. So if it gives us better results, these PE ratios are actually going to be smaller and smaller. And for AMD, I believe it definitely has the opportunity to outperform and to give us better results than we expect. The reason being is, even though I mentioned it in previous episodes, and again, this is not to say that this is going to take market share from Nvidia. This is me just saying that because of the overall supply constraint market, customers are willing to try number 2, number 3, and number 4 instead of waiting for number 1. Obviously, they're going to get number one as well, but they're not going to get enough number ones. So AMD with their MI300, with the MI350, with the MI325, and the MI400, I do believe AMD is going to continue to grow in revenue. The other thing that is important is AMD is also one that focuses in other industries where it can still help them grow a little bit. In the most recent earnings, and AMD's data center made up about 50% of total revenue, and the others started to get smaller, but they can still move the needle. Unfortunately, that's not the same for Nvidia, right? Nvidia, about 80+% of total revenue comes from the data center market alone. So it's very heavyweight. So obviously for Nvidia, if the gaming does good or if the other markets do good, that's great news, but it's not something that's going to truly move the needle. For AMD, because all the revenues are a little bit closer to each other and it's a little bit less dependent on the data center space, any type of growth in the client from their consumer GPUs, from the AI PC market, in the gaming, in the embedded market, can definitely move the needle one way or another. So I think those are the two things that AMD has for it. Number one is we don't expect much from the data center, but I do believe the current market gives it the opportunity to outperform our expectations. And number two is AMD has a vast variety of segments that still could move the needle if they outperform, like the client and the CPUs, the client and the embedded market. So AMD is actually one of my favorite buys right now, and this is one that I'm personally going to continue to add over time, especially at these levels of 130s. I think in the 130s, this is a stock that we're going to be talking about in the next year or two, saying, hey, look, I wish I would have gotten at these levels right now. Now, the second company we're going to look at is Broadcom. And one thing that we continue to hear is from all these big tech players, Microsoft, Google, Amazon, that they are developing their own AI chips. And for them to develop their own AI chips, they're actually working with two companies, either Broadcom or Marvell. I personally own AMD, I personally own Nvidia, and I personally own Marvell. Marvell is one that we were getting into in the low 70s, if I remember talking about this stock a few months ago. The stock was sitting here in those low 70s, high 60s, and I've done plenty of videos of Marvell then. So we can see the stock right now from those levels is up about 50%. So I'm super excited that we've discussed it in this channel. Now, Marvell and Broadcom, if we look at Broadcom right now is year to date is doing pretty good. I don't own this one, but the stock is up roughly 51% year to date. So both of them are kind of up on the same levels right now. And both these players help these big tech giants develop their own ASIC solution. And I am a firm believer that Nvidia is still going to continue to sell a lot of chips to these big tech players. But these big tech players are also going to want to have certain workloads done by their own AI chips, by their own custom ASIC chips. So I think Marvell and Broadcom can continue to win as Nvidia expands in this market as well. So out of the two, I want to say if we look at valuations right now, Marvell is actually trading at a little bit of a premium compared to when we were looking at right in the past. Forward 1 year PE ratio for Marvell is 36.95. This is actually more expensive than Nvidia. I personally wouldn't buy Marvell at these levels. I probably would wait for a pullback. I would obviously want something in the mid 20s instead. Now for Broadcom, their forward PE ratio is sitting at about 26.46. So this is actually trading at those similar levels of AMD. So if I was to pick some right now at these levels, I've talked about my thoughts on Nvidia in the past. I believe Nvidia is going to continue to win, but if I want to get more exposure into the AI space without getting more exposure into Nvidia, my number one would be AMD. My number two would actually be Broadcom, and my number three would actually be Marvell. But at these levels, I think Marvell is probably a little bit extended right now. We've seen a nice pull up. Both Marvell and Broadcom do have earnings coming up in early December, so maybe that might change. And a lot of people are expecting Marvell to get a nice amount of sales due to Amazon's chip. Amazon chips are made by Marvell's technology, and we know that they are increasing their Trainium and Inferentia 2 chips. So that's where the huge excitement is coming out for Marvell right now. So let me know in the comments below, are any of these companies ones you're thinking about adding? I know AMD gets a lot of hate sometimes. Like I mentioned, I'm never going to compare AMD to Nvidia, but this supply constraint market is giving AMD the opportunity to grow even if they're not number one. So take care, have a good day, and see you all next time.